Uh, so, like I said before, we could have easily trade NIO, in my opinion, just through bullish and bearish divergence. So, give me a second. Uh, so it's a cheat sheet that you guys can all use. Sometimes I forget about my divergences. I use this cheat sheet right here. And essentially just, I'll post this in the group chat as well. But this essentially just shows it's a cheat sheet for divergences. And if we go back to the NIO chart, so my entry for NIO, when I first took it, it was like right here, because the news itself was, oh, can you guys see this? Oh, all right. But the news itself was very significant, so I knew it was going to pop. And my first trade was to play the run up, which it did right here. And let me see if I can pull my other one out. Give me a second. All right, so this might look better. Let me just, how do we switch this? All right, there we go. So you can also see the divergences here too. So um, all of these fibs, I've drew them out for like for a pretty long time already, because I've been trading NEO for like a long time. So all my fibs here are really messy, but that's how I was able to make the trade today. So my first entry was breaking the 161 right here, and I entered. Let's see. On my Robinhood, I took a starter there. I took the 24.5 calls. Entered at 0.69, and I got an average of 0.78, 0.74, which was entered here. And that was my first scalp. From this fib to the second fib, that was my first scalp. And you can see that the RSI on this 5-minute here is 85, right? So when I saw the candle here, I took my first scalp because I knew this was next resistance. And I was just waiting. I saw the drop, which is right here. And I knew the double candle here, the VWAP bounce, was very significant, because I play a lot of small caps, and from what I've seen from a lot of small caps is that every time it goes near VWAP, as in like it bounces off VWAP, or if it breaks VWAP, it's generally either a continuation or a reversal. And you can see here it's a reversal. So here's where the first divergence comes out. We see a pump. We see a small pump to around here, and we see a consolidation, right? So what you could have done is, if you play small cap like me, what I did was I took another position here, and I played the run up. But I actually exited really early because I was actually afraid, because you can see there's a divergence here. Give me a second. This, oh, I can't draw here. But as you can see here, there's and this makes a higher high. However, the indicator itself makes a higher low. So that's a bearish divergence right there that you can see. So at this area when it broke above, I took a scalp here because I was afraid that because the RSI wasn't as high as the previous RSI, I was afraid that it was going to drop. So it was an early scalp, but the scalp itself was pure profit. So it continued up to here, and this was on these two candles. This is where there's potential reversal happening. You could probably see on the Heiken Ashi. Yeah, so right here, this is a doji, which I use really often. The doji generally in the Heiken Ashi signals a potential reversal. So I didn't trade anything after here because I just went for the 2 scalps. But what you could have done easily on for NIO is just by using bullish and bearish divergence, you could easily take in a trade. So we see a dump back to this fib. Once again, we have the double candle, the pipe bottom. And when this occurs and you see a consolidation, you have to look at the RSI immediately. You see that there's a higher low, right? So when you see this higher low and the RSI is making a lower low, that in the cheat sheet, it shows that it's a hidden divergence where it's gonna signal a continued bullish movement. So just like that. So imagine if you entered right here, or if you entered right here, like if you use the Heiken Ashi and you entered on this doji. So let's say if you entered on this doji, right, or on the next one if you want to play it safe. If you took the scalp from 26.7, 26.07 or 26.03, and then let's say it was a day trade to the next fib, because that's how these fibs are drawn out. But let's say if you take the next trade to the next fib, easily could have, let's say, if you want to take conservatively, 26.07 to, let's say this doji, because dojis generally signify a reversal. So let's say conservatively here, 26.72. That's a 60-cent move per share, and that is a lot for if you were to just day trade contracts. Shares itself, if you're able to capture this in a share, this is pretty good. But contracts itself would have probably made you a lot more. And once again, we're nearing resistance here. So when I was watching this, oops, how do I control? Oh, that's a rip. But when I was watching this on the fib, once again we saw a break above at this level. We saw a break above from the previous level right here, the resistance. And once again, you see that the RSI right here doesn't make a higher high compared to the underlying stock price. So that again is another bearish divergence that you could easily see. That you could have played this right from the fib to the next fib. And yeah, that's essentially how you could have literally scalped, I'd say, an easy, probably one move. If you caught this move off the VWAP, that was conservatively, let's say from here, just do a conservative 40%, 25.24 to 26.39. That's easily $1 move, $1.26 move per share. And if you're in a contract, that's probably like if you had my 24 contract, the beta right there is 83. So you could have made an easy, let's say conservatively $70 or $60 per contract if you caught this pump just off the VWAP. And if you saw a divergence coming in, as you can see from here, and you can see from here, you could have easily caught the second run up to the next fib, breaking this fib. And that's another probably like 70-cent move, which is like another $40. And once again, you can easily continue to see how in small caps, it's really based off like technicals, and where we see a whole bunch of bounces off fibs, continuing to the close when the market closes. So yeah, it's probably a bad explanation, but so I think Meme asked, I'll repost the question on chat. That was his question. All right, so about smaller plays. Let me see if I can get an example. I think work would be a good example. All right, so it's sloppy, but so I played work. My initial first work call was I saw the bottom here, saw this bounce. I think my first work call was around here. It was a 30 call. That's October 16th, and yeah, as you can see, it ran up by like a lot. Like the weekly is super bullish, and you can see here it's a potential cup and handle with the curl, ignoring this part. So the curl, the handle, the cup and the handle, and then the breakout potentially. So I'm pretty bullish on work, especially with the news that came out today as well. But going back to the question where he was asking how I'm more confident in smaller plays that are further out. So I like to think of it this way. Generally, you want to, if you have a really small account, like when I first started, you would want to use all of it in options. However, you want to play it smartly. So what you would do is you will want to go for, you have to be really positive in your trade. You have to be really confident in your trade. So what you want to go for is something that's far, I want to say far at the money, but far in expiration. So you have time. So time is your best friend when you have a really small account. And like just in this scenario, I went for the 40 calls, even though they were like really far at the money, considering how slow work moves. But the reason was because if you have a small account, you want to be able to average down as much as you can because that's the main goal in any of the trades you do. You want to take a starter, and then you want to be able to average down. So the reason why I went for the 40 calls was because back when I first took it, the calls were at around 0.36, 36 cents each. And I think I got a starter of, I think 20. I plan on putting around like, I plan on getting like 60 contracts. So my way of taking contracts, especially with a starter, is I take them by 33%. I take them first, I put an initial 30% of my total trade in, and I eventually continue to average down along the way, or average up if I need to. Like this trade, I was planning to take around 60 contracts or like 50 contracts total, and I currently have 35. So, oh, what am I supposed to say? I don't even know what I'm supposed to say. Oh no. So, because I was able to take a far contract, which I know was going to be safe because of my time, and it was somewhat liquid, as you can see. The contract is somewhat liquid that you can sell. Um, I was able to give myself leeway. So like if let's say if I got if let's say if your account has $750 or $700 and you take like 5 contracts, right? For the 40 call, if it drops 50%, you won't lose all of your account value because you have cash. So what you would do is you'll be able to average down easily, which is why a lot of people ask why I'm so successful with the small accounts. It's because I'm able to average down by taking further out contract, which is riskier. But then because you just have to be confident in your technical analysis, which is what I trade off of. And because I'm so confident that I'm pretty sure that the stock is probably going to go up, and I knew that once open interest and volume picks up on that specific contract, I know that it's going to be more liquid. Like when I think when I first alerted the 40 calls, the bid and ask were like I think 10 or 15 apart, but now it's like it's 5. I think this bid is from someone else. So I think the bid and ask is like 0.1 apart, which is still not bad considering when I first got it. So yeah, it's all about having to take a starter and then averaging down, that's why I take a lot of like small contracts, so that I'm able to average down a lot if I need to. And time is your best friend, of course. TTWO, right? Let me see. Let's see. Back up. Channel. Right, is it trend channel? I do not know how to use Weibo. Yeah, you can see this continuing upwards, but that's only if the market allows it. Oh, it doesn't even let it go further. That's a rip. Let me see it on my. Let me look at it real quick at my. Give me a second. Let me take a peek at it. TTWO initiative. It could probably keep going up slightly, but I am not a big fan of this 4 hour. That is, I think, a bearish engulfing. Might have to double check that real quick, but oh, that's actually a bullish Harami. But this candle is really weird, in my opinion. I think you should just wait on it a bit because we're sort of at a resistance level here. Like right here, I would say. Yeah, I would say that's sort of my resistance. Let's take this. I think it would be better if tomorrow watch if it breaks above this 0.618 fib before doing anything. But yeah, like I'm not a big fan of this doji right here on the Heiken Ashi. So I would just wait on it. I wouldn't rush into a. I wouldn't rush into this trade if you're planning to trade it. Yeah, of course.